This is Nightly Business Report with Tyler Matheson and Susie Garrett.
Snap back. The Dow Jones Industrial Average logs a triple-digit gain one day after a steep sell-off and amid worldwide condemnation of events surrounding the downed passenger plane.
Return to its roots. Will General Electric's industrial transformation bring back some energy to its share price?
Special delivery. FedEx indicted on drug trafficking charges. What could that mean for the company and its shareholders? All that and more tonight on Nightly Business Report for Friday, July 18th. And good evening, everyone. I'm Sue Herrera, filling in this evening for Susie Garrett.
Welcome, Sue. I'm Tyler Matheson, and welcome to all of you. A striking and perhaps unexpected turnaround in the markets today, with stocks rebounding from yesterday's big sell-off. The snapback came despite growing concern about global terrorism and worldwide condemnation of the downing of that Malaysian airliner yesterday by, the U.S. believes, Ukrainian separatists backed by Russia. At the White House today, President Obama revealed that one American, a U.S. and Dutch citizen, was on board that downed jet, while he called for an immediate ceasefire by Russian separatists and a thorough investigation into the cause of the incident.
This was a global tragedy. An Asian airliner was destroyed in European skies filled with citizens from many countries. So there has to be a credible international investigation into what happened. The UN Security Council has endorsed this investigation, and we will hold all its members, including Russia, to their word.
John Harwood joins us now from Washington with the latest on Malaysia Airlines 17 and the reaction from leaders around the world. John, what is the latest out of Washington?
Well, Tyler, what the president was trying to do was to put pressure on and isolate Vladimir Putin. He's been unable through sanctions so far, especially with the Europeans reluctant to go along with really tough sanctions, to persuade Vladimir Putin that the costs of his intervention in Ukraine exceed the benefits. What he's now hoping is that the shock the conscience nature of this kind of event, which the United States clearly believes was done by pro-Russian separatists trained and supplied by Russia, is going to change that equation and cause Vladimir Putin to change.
John, does it appear, though, that our European allies are on the same page as those of us in the U.S.?
I think they're moving in that direction, Sue. You had Angela Merkel today talk about halting the sale of French military equipment to Russia. They're going to require proof through this international investigation that Russia was behind what happened. And one of the points that American officials have been making is that Russia lacks the separatists in eastern Ukraine lack the capability to operate the equipment needed to take down that airplane. So I think it's going to move slowly, but this is a game changer in terms of international public opinion and European public opinion. So I think the odds are good that they will be with the United States.
You know, critics of the president have said that his response in this particular incident and with respect to Russia and the Ukraine generally has been notably weak. What would they have him do, and what other leverage does he have in that part of the world which is so far from military power of the United States?
Well, I think everybody agrees that military intervention by the United States is not an option. The president reiterated that today. I think the criticism is that the president needs to strike a tougher tone, implement tougher sanctions, even at the cost of fallout for the U.S. economy. But I think this is a moment where those things are possible. The president was cautious today. He said, we don't want to get ahead of the facts. We want to see what the international investigation points up. Samantha Power, his UN representative, was a little bit stronger in her language, saying Russia must end this war. But I think the president's edging toward, and the rest of the world's edging toward, the kind of tougher stance that critics would have him take.
So it sounds like that's the next step, or is there something else that needs to happen before that, John?
I think the next step is to have the investigation take place and get the results. You know, when the president was asked today, do you blame Vladimir Putin for this? He said, I don't want to get ahead of the facts, don't know who made the decision to fire the missile. But I think as those facts accumulate, this is the kind of thing that is simply powerful enough that it is going to produce the kind of consequences that could change the outcome. I heard that from former national security advisors to both parties today.
John Harwood in Washington. John, thank you very much. Well, despite those lingering questions about the tragedy over Ukraine, investors shrugged off worries about the impact on global markets, with the Dow snapping back with a triple-digit gain. Investors got help as well from strong corporate earnings before the bell and a measure of leading economic indicators that rose in June for the 5th month in a row. Here's how the major averages looked at the closing bell after a kind of an exhausting week on Wall Street. The Dow ending near the highs of the session, up 123 points, and closing back above the 17,000 mark. The Nasdaq shot up 68 points, and the S&P 500 was up 20. And for the week, the major averages finished in positive territory despite all of that volatility, with the Dow posting the biggest gain of almost 1%.
One of the companies posting strong second quarter earnings before the bell today was General Electric. Oddly enough, the only decliner in the Dow today, even though income was up 13% in its latest quarter. Shares fell about 0.5% as the company spins off more non-core divisions to become a more focused industrial conglomerate. Bertha Coombs has more on the big changes at GE.
GE is in the midst of a big transition with the acquisition of French energy firm Alstom and plans to spin off its credit card unit amid a move by CEO Jeff Immelt to shrink the company's financial arm, GE Capital.
Mr. Immelt is really accelerating the rate of change in the portfolio. With the 3 transactions that are going on, that's going to change the composition of total revenues by over 15%.
GE's oil and gas and aviation units drove profits in the second quarter, while its healthcare business saw weak results as hospitals bought less equipment. With the Alstom deal, 75% of GE's earnings will be driven by its industrial businesses by the end of 2016, a large bet on energy in Europe that's expected to add to earnings.
They see it as the credible possibility for them to have a business model that actually grows faster, both on the top line and the bottom line, than what they were doing, 5 years ago.
The company expects to raise $3.25 billion from the spin-off of its Synchrony credit card unit in an IPO later this year. For some investors, all of the moving parts create too much of a headwind for the company's stock near term, especially until the Alstom deal is finalized.
I generally wouldn't be a buyer of the stock at these levels. Plain and simple, there's too much risk from an execution perspective.
Once considered a bellwether on the global economy, Wunderlich's Art Hogan says GE's repositioning says a great deal about the state of business.
For GE to be increasing their exposure to the energy markets, whether it's in oil and gas or power generation, power distribution, makes a great deal of sense. They're really mirroring the way our economy is shifting.
On the company's conference call, CEO Jeff Immelt told investors global markets continue to be positive and that both the Alstom and the Synchrony deals are on target to close next year. Bertha Coombs, Nightly Business Report.
General Electric may be striking some big international deals, but it remains based right here in the United States. Elsewhere this year, there have been an unprecedented number of so-called corporate inversions, with U.S. companies moving their corporate tax bases overseas to save millions. And today, the biggest one of all was announced. Meg Terrell has the story.
From Chicago deep dish to fish and chips, drug maker AbbVie is packing up and moving overseas. The company's paying more than $54 billion for Dublin-based Shire and says its tax rate will sink to 13% by 2016, from about 22% now. It's the latest in a wave of so-called inversion deals. Analysts say it's likely to increase already mounting scrutiny from Washington on the practice and put pressure on competitors to seek similar deals.
It certainly raises the pressure on the companies that have not inverted yet to do it. If you are a U.S. domiciled company with some cash restriction, more and more of your peers are in an advantage over you when it comes to acquisition, when it comes to paying taxes. And if they buy you, as they might, they will enjoy the tax benefits. So you better move overseas yourself.
Earlier this week, drug maker Mylan bought assets from Abbott Laboratories that will enable it to incorporate in the Netherlands and benefit from a lower tax rate. Abbott's CEO Miles White today stirred rumors that it may be the next to do such a deal when he took a stand on corporate inversions in an op-ed in the Wall Street Journal. Analysts say the AbbVie Shire deal also has implications for another area of healthcare, companies that make drugs for rare or so-called orphan diseases. Shire has been building up that part of its business, and AbbVie's expected to continue to do deals in the space.
AbbVie paid so much for Shire primarily because of its rare disease orphan indication franchise. It's about half the company, Those are drugs that are being priced very, very high and treat a very small group of patients. They generally provide high benefit to the patients, and therefore there's limited pressure to control the prices of those drugs. It's a very attractive business from the perspective of drug companies.
Gal suggests drug makers from BioMarin, Sobi, BioCryst, Dyax, and NPS Pharma as potential acquisition targets. It all spells more deal-making for pharmaceutical companies. For Nightly Business Report, I'm Meg Terrell.
Shares of both AbbVie and Shire rose today. AbbVie up almost 2.5%. Shire gained more than 1%.
Still ahead, our market monitor has a list of stocks that he says could double in price over the next 12 to 18 months. And he's going to share them with us next.
The calendar says July. School was just out a few weeks ago, but retailers are already gearing up for back-to-school sales. And just today, the National Retail Federation predicted that parents will spend nearly $8.5 billion this year on tablets and other electronic devices for their kids. That's about 7% more than they spent just 1 year ago.
FedEx says it will fight charges. It helped internet pharmacies distribute drugs illegally to customers without prescriptions. A federal grand jury in San Francisco yesterday returned a 15-count indictment against the delivery giant, saying senior management at FedEx knew exactly what was going on. It's yet another glimpse into the shadowy world of internet drugstores. Scott Cohn has the story.
In California, Dan Weinstein is still mourning the death of his wife, Cheryl, 3 years ago.
There isn't a day that goes by that I don't think of her and miss her.
Cheryl was addicted to painkillers. She died of an overdose of drugs bought online with amazing ease without a prescription.
They come via FedEx. They come to any address that you want to put them to, as long as there's a credit card to pay for them.
The Justice Department says FedEx is part of the problem. In a sweeping indictment, the government says FedEx knowingly ships the drugs, sometimes delivering them to parking lots. Authorities say they've been warning senior FedEx management about the dangers of internet pharmacies for a decade. But rather than cut off what the government says was a huge source of revenue, FedEx simply assigned them a different account classification.
FedEx says it's innocent, says it's been asking the government for years for a list of pharmacies to avoid, but to no avail. The company says it has a history of cooperating with law enforcement, but it also handles more than 10 million packages every day.
We are a transportation company. We are not law enforcement, the company says in a statement, adding that customer privacy is now at risk. The company also made its case directly to Wall Street analysts, who for the most part are sticking by the company.
I think this is relatively more relegated to headline risk as it is to financial risk as it stands right now with the information we have today.
FedEx rival UPS settled similar charges last year for $40 million and a host of reforms. Dan Weinstein says the shippers are just part of a much larger problem.
It's just pure greed. All they want to do is make money.
Consumers going outside the U.S. system to save money, and internet pharmacies preying on the vulnerable to make it. Scott Cohn, Nightly Business Report.
Honeywell reports better than expected profits and hikes its outlook, and that is where we begin tonight's market focus. The results were driven by higher sales of its turbochargers that help make cars more efficient and powerful. New fuel efficiency regulations have increased demand for those parts. The industrial conglomerate also raised the lower end of its 2014 profit forecast range. Shares up more than 1.5%. They closed at $96.82. Shares of the auto parts maker Johnson Controls went the other way as its earnings fell in the third quarter. Restructuring and other charges offset a small increase in revenue. And even though the results were generally in line, investors were not cheered at all. Shares down more than 1% on this up day. They finished at $49.16. Shares of VF Corp fell after the apparel retailer reported a drop in gross margins. The company, which owns brands like The North Face and Timberland, also gave investors a disappointing full-year profit forecast, and the stock dropped 1% to $60.95.
Bank of New York Mellon saw its second quarter profit fall, dragged down by hefty charges and a decline in fees, but it still managed to post results that topped estimates. The company also announced that it will not be selling its corporate trust unit, which has been under review for a possible sale. The shares, as a result, rose 1% to $38.43. Two IPOs to tell you about. Shares of Terraform Power, which is owned by Sun Edison, surged in the solar plant owners market debut. Also, Trupanion started trading today, but investors weren't quite as excited about that company, which is a pet insurance provider. Terraform closed 32% higher to $33.09. Trupanion shares up 14%, not bad, to $11.40. And shares of Amazon were higher after the retailer announced it's rolling out a new subscription service for Kindle devices. That new service will give users unlimited access to the company's library of ebooks and audiobooks for about $10 a month. Shares were nearly 2% higher to $358.66 a share.
Well, there's growing concern that another well-known stock, that of the luxury fashion retailer Michael Kors, may have shot up too far too fast and may be in a bubble right now. So could that bubble be about to burst? Courtney Reagan takes a look.
Since its IPO in December of 2011, Michael Kors shares have been unstoppable. Until about 3 months ago. Kors stock has returned more than 300% to shareholders in the 31 months since going public. But the premium accessory maker has begun to show signs of weakening, leaving some wondering whether the Kors bubble has finally burst.
It may be, a shift in relevance or preference. At the same time, something else we've been tracking to date has been market share in North America for this brand. And we really see them as having 18% market share in North American handbags at this point. 20% is really the threshold where we would begin to be concerned that they're beginning to demonstrate a saturation point in the market.
Payson also says Google Trends in U.S. search data for the term Michael Kors have declined year over year for 5 straight weeks. There's only been one other week of decline in this metric since going public. Competitor Kate Spade, however, has seen a recent uptick in Google search trends. Citi, William Blair, and Stern AG have also expressed concerns about Kors this week. Beyond potential saturation, analysts point to increased promotional activity, higher levels of inventory, and compressed margins as other worries. But not everyone is bearish on Kors. Today, Canaccord Genuity says it's maintaining a buy rating on shares. And Piper Jaffray's Erin Murphy is reiterating her overweight rating.
This continues to be a global growth story that we think is grossly misunderstood by the street. It's growing across multiple categories. We think over the next 2 to 3 years, the near term or that kind of intermediate term upside really comes from the European market, what they're doing there. It's extremely transformational.
While many compare Michael Kors to Coach, which has also suffered from market share and stock price declines recently, Murphy thinks Ralph Lauren is a better competitive peer to Kors since both have large product lines beyond handbags. Kors' meteoric sales growth has been stellar, a performance level only sustainable for so long. However, Piper Jaffray's most recent 8,000 teen survey still indicates Kors is a top desired handbag brand among young millennials, potentially giving the brand some back-to-school sales strength. For Nightly Business Report, I'm Courtney Reagan.
Our Market Monitor guest tonight says there are pockets of opportunity in the market. You just need to know where to look. He's going to tell us. He is Mark Yusko. He's Morgan Creek Capital Management CEO. Welcome. Nice to have you here.
Thanks for having me up here.
So there are pockets of opportunity. I assume that means that valuations are not stretched as they appear to be in some other sectors.
Yeah, I think it's like that joke about the man who drowned in a stream 6 inches deep, an inch on the sides and 10 feet in the middle. I think the same thing's true of the market. The average looks fairly to maybe a little overvalued, but there are some extreme pockets of overvaluation. But then we think there are some really extreme pockets of undervaluation, places like energy and energy services. So we try to dig in the value areas.
The market snapped back today after yesterday's big sell-off, regaining virtually all of what it lost yesterday. I wonder when you heard the news of this downing of the plane, did you do anything? Did you change your portfolio at all, buy or sell?
It's a great point. We didn't do anything. We try not to react. We try to be more proactive. Now, you can't be proactive to a tragedy. You don't know what's going to happen. So we got a little bit lucky. We had lightened up on some of our Russian exposure last week, just trying to lower volatility risk generally, but that's just luck. But overall, we try not to react particularly in big down days or big up days. You don't want to sell on a big down day because then you miss the rally back. And you don't want to buy on a big up day because it'll usually be overbought.
How much of this is also because it's summer? Volumes have been low. So any moves in the market tend to be a little bit more exaggerated than they would be, say, if we were in the, the fall earnings season.
It's a great insight. And I actually tweeted this out the other day that, when you take events plus no one at the desk, you get volatility. And that's exactly what you see this time of year. And around holiday weekends, you see it too. 4th of July weekend, you saw it. There was a big announcement about some company, and suddenly that stock takes off, a lot of short covering. Low volume is tough.
All right, let's get to some of your picks, leading off with VIP Shop, not a company I know. Tell me about it.
It's actually a really amazing story. So we've been involved for a while, since the private equity stage of this business. Think of it as TJ Maxx without stores in China. So they sell discount merchandise.
I'll tell you what gets my
online.
attention is 433% higher in a year.
That
gets my attention.
That'll get your attention. So here's the thing. This business is a fantastic business because they're doing to retail kind of what cell phones did to landlines in emerging markets. They leapfrogged. So the same thing as you think, if you don't have to put all the infrastructure in place, you don't need bricks and mortar stores, you can have higher margins. So what they've done is they put together a great management team, ranked the 3rd best behind Alibaba and Tencent. It's pretty high praise. And they put together this plan to basically become TJ Maxx of China. TJ Maxx, $40 billion company. VIP Shop's about $11 billion company today. They have higher margins, bigger population. We think it could go up a lot.
You mentioned earlier the energy sector. Halliburton is one of your picks as well.
Yeah. In the gold rush, who got rich? The gold miners or the guys who sold the picks and shovels? Levi Strauss, the guy who bought the shovels and ran down California Avenue saying there's gold in them in our hills. So I was in Texas Tuesday, Wednesday, meeting with some energy folks. And one of the things they talked about is to get the oil out of the ground and the gas out of the ground, you have to drill more holes, longer laterals in the horizontal drilling. You have to use more fracking sand. You just have to do more to get it out because the decline rates are so high. So a company like Halliburton, which specializes in helping people drill holes, is going to make a lot of money.
And your last one quickly is Horizon Pharmaceuticals. Couple of sentences on that one.
Yeah, so the bottom line there is specialty pharma. You guys talked about in an earlier story. Is the big companies, big pharma companies need R&D. They need product. And so these specialty pharma companies are taking kind of orphan products and specialty areas, like in this case, inflammation, rheumatoid arthritis, and they're putting packages of drugs together that are very attractive to a bigger acquirer.
Any disclosures that you have for us in terms of whether you hold it or your clients?
We own all 3 of those companies in our mutual fund, and some of our clients own it as well.
All right. Mark,
absolutely.
Thank you so much for joining us.
Thanks for having me.
Appreciate it very much. Mark Yusko, Morgan Creek Capital Management CEO. Coming up, the deadline to comment on one of the FCC's most controversial proposals is fast approaching, and it's dividing some of the biggest players on the internet. Some new data from the Labor Department shows that in June, 33 states added jobs. 17 lost them compared to the month before. And with that, the unemployment rate dropped in 22 states from May to June. It rose in 14 states, and it stayed the same in some 14 others. Right now, Mississippi and Rhode Island have the nation's highest unemployment rates, both at 7.9%. North Dakota, thanks to the shale oil boom, has the lowest at 2.7%.
The deadline for anyone wanting to weigh in on the FCC's controversial proposal concerning so-called net neutrality was extended to Eastern Time midnight tonight. Julia Borston takes a look at what net neutrality is, what the FCC is proposing, and what's at stake.
The FCC has been deluged with a record more than 1 million comments on its proposal for new net neutrality rules ahead of tonight's deadline. The commission was forced to extend the deadline from Tuesday because it was so slammed with comments the website crashed and many people weren't able to file objections.
I think a lot of times we get hung up on the slogans, net neutrality, open internet, paid prioritization, but the key question is, How do we preserve the internet as a platform for innovation and investment?
Net neutrality essentially means that everyone has equal access to the internet. The FCC is proposing that broadband providers be allowed to charge content companies for a fast lane of service to give consumers faster access to their content. The proposal would ban internet providers from discriminating against legal websites, but many are concerned it would disadvantage companies that can't afford to pay. Filing in opposition to what they call a pay-for-priority platform, the Internet Association. It represents 36 web companies, from giants Netflix, Amazon, and Google to smaller companies including Uber and Airbnb. Netflix also submitted a filing urging the FCC to reclassify broadband providers as a public utility, just like the phone networks, and prevent them from favoring certain websites over others. Supporting the FCC's proposal, internet service providers including Comcast, Verizon, Time Warner Cable, and AT&T. The nation's largest internet provider, Comcast, says it supports the FCC enforcing transparency, no blocking, and anti-discrimination rules. As a condition of its purchase of NBC Universal, Comcast has to follow the old rules until 2018.
It seems to me that the FCC shouldn't be in the business of preemptively determining for an entire industry how the business arrangements should be developed. This is a pretty dynamic marketplace, and I think we should wait to see how things develop in the market before taking preemptive action.
Even after tonight's deadline, the agency will accept responses to comments through mid-September. It's expected to make a decision by the end of the year. For Nightly Business Report, I'm Julia Borston in Los Angeles.
And Comcast, which Julia just mentioned in her report, is the parent company of CNBC, which produces this broadcast.
And on that note, that does it for Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
And thanks from me as well. I'm Tyler Mathison. Have a great weekend, everybody. Enjoy it. We'll see you back here on Monday.
You got it.
I'm Tyler Mathison with a Nightly Business Report news brief. The market staged a remarkable turnaround today, gaining back nearly all of Thursday's losses after that passenger jet was shot down over Ukraine. Today, stocks got help from solid second quarter earnings out of Google, IBM, Honeywell, and General Electric. The Dow up 123 points, closing back above the 17,000 mark. The Nasdaq rose 68 points. S&P 500 was up 20. FedEx was indicted on charges of illegally transporting prescription drugs bought through online pharmacies. Unemployment rates declined in 22 states during June, following a fifth straight month of solid hiring. Amazon.com unveiled a new Netflix-like service for Kindle customers, $10 a month for unlimited ebook downloads. And tune in to Nightly Business Report right here on your public television station.